All right, guys, we're going to do a video today. Actually, it's a live stream. We're doing a live stream. We're going to look at the S&P 500. As you know, since the last time that we did one of these live streams, market's taken a pretty big hit. You have the S&P 500. It's getting destroyed. You have the NASDAQ getting destroyed, the Russell. And today alone, you have the S&P 500 down 1.4, the NASDAQ down 1.7, and then you have the Russell down 1.8. So pretty significant days to the downside. Are we getting close to a bounce? Because I'm starting to see a lot of indicators that are suggesting that we're getting very, very close to a bounce. But then you have the S&P 500, which was testing a long-term rise in trend line today, a year-long trend line, not able to hold that bounce. So it's getting very interesting here to see where are we going to bounce at? Can the 10-year yield start to come down? And can we finally get that rally? So in this live stream, I'm going to go ahead and look at the S&P 500. We're going to look at the Russell. We're going to look at the NASDAQ. We're going to look at different bounce levels there to be paying close attention to. Also looking at some of the different indicators that suggest that perhaps a bounce is imminent. So if there is a bounce that's imminent, which stocks would I be looking at to possibly play that bounce with? So that's what I'm going to take care of there. Then I'm going to go ahead and look at the gold and silver ETFs and look at whether or not there might be some opportunities there, because they've been in free fall lately. And a lot of people have been surprised by that. But nonetheless, the gold, silver taking massive hits. Are they close to a bounce? And if so, which levels would I be looking at there? But first, make sure that you guys are liking, subscribing, hitting the notification bell thing so you can get notified of all my future videos and live streams that I do here. Good to have you guys in here. Make sure you're posting the charts that you want me to look at. If you have any questions, if you have stocks that you want me to look at, I'll go through the charts, tell you what I'm thinking about those things, and we'll tackle this market together today. So first up, let's get going on the SPY here. All right, on SPY. You have declining resistance here. We tested it, and ever since then, we've been selling off nonstop. So you look at it from a weekly chart, we're looking at 5 straight weeks of pain so far. Yes, we're still young in this week. If we get a reversal, there's a good chance that we can reverse this candle right here, make it green. But so far, not looking good. But you see this white line right here? That's the 200-day moving average. We haven't tested that since March when you had the regional banking crisis. Now we're coming back upon it. Why are we seeing so much selling in the market in general? Well, for one, we have a lot of elevated PEs. I mean, PE ratios that have been through the roof over the course of the past 8-9 months. But when not everything's going perfect, those high PE stocks, they're going to start taking hits. And so the one thing that's not going very well with this market right now is this 10-year yield. 10-year yield, this is reflective of the 10-year treasury. As the 10-year treasuries go down, the yields go higher. So this big move right here that you saw in the beginning of September, that's going to be reflected in what you've seen in SPY right here. From the beginning of September, it took a massive hit. So it surprises me how high it's getting. Up another 2.5%, the 10-year yield is. It's up to 4.8%. This is getting to the point where things may start to break in this economy if it continues to climb like this. Where was it at during the regional banking crisis when it almost took down all the banks? It was much, much lower. We were at just like a little under 4.1. Now we're at 4.8. And yet you don't hear anything about anybody possibly going under, hedge funds capitulating, banks possibly going down, nothing. So I do think that at some point, these things keep going higher. It's going to put pressure on something. Something is going to break. Don't know what, don't know when, but something's going to break. So it's just a matter of time. And then the Fed will probably do an emergency rate cut. And then all of a sudden we're back down into the 4s and then cutting aggressively from there. That's just what the Fed has done over the years. That's what they did during the 2020 March sell-off. All of a sudden they went straight back down to 0. I'm not saying they're going to go cut all the way down to 0, but if something breaks, yeah, I do think that they would cut rates. They're cowards like that. So 10-year yield, this is your main driver of why there's so much market weakness. Honestly, it surprises me we're not trading much, much lower than where we're currently at. If you were to look at how well the SPY has held up versus the 10-year, it actually hasn't held done a bad job of holding up relative to this huge spike in the 10-year. So going back to SPY, is there an opportunity to bounce? Well, you got this rising trend line here that goes back to October of last year. This is where it was testing it for a solid 4 straight days. And then finally, we gap below it, which is very common to see the gaps below a support level that won't break, especially when you're testing it day after day after day, like what we did over the last 4 days. We break it. Now we're sitting just above the 200-day moving average. I do think that there's going to be an attempt to bounce the market there. Whether it holds is a whole other story. But then with this rising trend line broken, like what are we looking towards for potential support levels? And that becomes the problem. There's not a lot of support here anymore in this market because it made such a huge run up off of the March regional banking crisis. We flooded the market with all that liquidity. I think it was like, like $700-800 billion worth, that there wasn't a lot of support formed along the way. You have a little bit of support right here just below the 200-day moving average, but it gets very scant from there. This is where we kind of broke out here in May. But again, there's not a lot of support for SPY. On the Qs, a little bit different. There's a little bit more action to be watching here. So with the Qs, you have this support level, and it's sitting right there on that support level. Now you also see these 2 yellow lines right here. That's what you would call a bear flag. 4 straight days, it rallied. 6 out of 7 days, it went higher. Didn't go higher by much, but nonetheless, it did manage to eke out six green candles in a 7-day period. But now it's testing the support level here at about 353. Is that going to hold? If the 10-year continues to go higher, I would assume that it will keep going lower. I don't think this level is going to hold at all. You also have this gap right down here yet to be filled. Rising trend line here going back to January of 2023. That's broken. So right now, the line in the sand for the Qs is this white line here. This is a huge level of support. You also have a layer of support underneath. If that level cannot hold, then you're starting to talk about, man, could we actually see 328? Very possible you see 328. I mean, remember, we saw the NASDAQ climb about 40% within the first 6-7 months of the trading year. So can it drop another 10% here? Absolutely, it could. Absolutely. So do I necessarily think we're going to go straight down from here with no bounce? I think there's probably a bounce in the near term here somewhere that could probably add a few percentage points to these indices. But if you would have asked me last week, would we have bounced by now? Yeah, I would have thought we would have seen some willingness to bounce this market. The Qs did get a little bit of a bounce, but this is a very meager bounce here. The only thing that was impressive about it is the fact that it was 4 straight days against a rising 10-year yield. You're looking at the bonds. Bonds are going to go down when the yields go up. This is capitulation here, guys. I mean, we're looking at some pretty bad things here. This support level, this goes all the way back to 2002. Basically, as long as I can chart this thing, it goes back to 2002. This is a monthly chart. It's held it every time that it was tested. Then we went on this epic run on the bonds, and guess what? It goes from 180 down to 85, loses half its value, the 10-year or the 20-year Treasury bond fund. So guess what? Now we're at or slightly below this key support level. This becomes a huge, huge market or problem for the bonds. I mean, this is where capitulation is taking place because a lot of these people who are buying these long-term bonds, they're not expecting for this kind of price action when they were buying them. This was like beyond worst case scenario probably in their analysis. Good to see you there, Black Mamba. So now that we're down here, what is going to break and when? And that's really what I'm watching for. I've been very nervous about getting on long setups here. If I do it, I'm taking gains aggressively. If I'm up 2-3%, I'm going to be taking some partial profits for sure. I even got into Apple last week. I think I held it for about a day. Market started falling apart again. I took a 0.3% profit on it. Better than a loss, but it wasn't much. And so tempered expectations in a market like this. You want to make sure that you're dealing with capital preservation as a mindset. So we talked about the 10-year yield. We talked about the 20-year Treasury bond. Looking at VIX here. How far could the VIX go? VIX has some room to run here, guys. There we go. We got the daily up here. If you go back in time, going back to about 2021, there's been this consistent level of support for the bonds or for the VIX. The VIX has constantly bounced off of this level. Then it broke through it back in April of this year, went back down, formed a double bottom. We got a nice little double bottom here, consolidation. Now we're getting a breakout. We're back above that major support level, something that we weren't able to do in August when we tried it. And now we're starting to talk about, if we continue to see further downside, is a push back to 31 in the cards for the VIX? Very, very possible, especially if something breaks. I would expect a surge to 31. And that's where you may see that resistance kick in, just as we saw all throughout 2021. This was a heavy, heavy layer of resistance here that goes all the way back to the late 2020. T2108, this is another chart that I want you guys to take a look at here. This is percentage of stocks trading above their 40-day moving average. 16% of stocks are doing that right now. When we're starting to get to levels that haven't been seen since March, again, the regional banking crisis, October, where we got into single digits. When it gets into the single digits, that's usually the time where I start looking at adding some new long-term positions. That's the time period that I really like for doing that. And then if we see a bounce, what am I looking at from some long-term setups? First one I would like to throw at you, McDonald's. Guys, look at this rising trend line here, okay? We got this rising trend line, started all the way back in March, tested it back in September. Look, we don't know until we start to see the bounce how strong that support level is going to be. When it was formed back here on this level off of the October lows, went on a huge, incredible run. Almost within a couple months period, 233 all the way up to 278. McDonald's is a slow moving stock typically. And now we've got this test at 254. If that level can hold, and I'm not saying that it's going to, but if it can hold, then that's where you want to say, all right, I can get long here. I want to put my support or my stop loss below this rising trend line here, have a stop loss in place, have some risk management. It's also one of probably the better stocks from a volatility standpoint. Yes, it was down 1.2% today, but less than what the S&P 500 was down as a whole. So that's what I'm watching for there. Potential bounce going all the way back to the rising trend line that started in March of last year. And a couple others that I want you to look at. Home Depot. Now, this was one that is essentially for most of 2022 and 2023 is just traded in a sideways range. It hasn't really done much. But within that range, there is a possible opportunity. Now, you had this double bottom here. This started in March and finished in May. Then it broke out in June and July. Made a nice run going all the way from 305, very textbook double bottom-like pattern to 340. Now it's pulled back. But it's testing a support level that has held up very well. Or it's not quite there yet, but it's getting close to it. This support level goes back to the beginning of 2020. And look where we're getting. We're getting very close to this level, 282. We're sitting at 291 right now. Not worth buying right now and assuming that it's going to bounce. Let it test, let it hold, let it show that it can bounce off of that level or at least start the bounce. Put the stop loss where I'm going to be putting my stop loss is probably below this 280 level. And then try to see if I can't write it up to, maybe about like a 304 as a dead cat bounce play. The others, surprisingly, Meta. I kind of hate this stock at times. I mean, this stock is, really tormenting me at times. It can be really frustrating, but nice triangle pattern here that it's formed. Tried to break out back on Friday, couldn't do it. So I'm holding it into the close is going to be very important. So if you can get over that 308 level, hold that 308 level into the close, very, very key for a breakout here on Meta. Not huge fan of breakout plays right now, but if this market's going to bounce and we're going to get a dead cat bounce, you would expect that a lot of these big tech stocks are going to lead the way. Then I would bring to your attention Deere, John Deere, DE. Good to see you here, Ryan. Good name too, by the way. Yeah, I'll check out that CCL. Actually, I've been looking at that chart for a little bit here over the course of this week. Some developments there to watch out for. So Deere, decline trend line, purple line here. Then you got this rising trend line here going all the way back to July lows of last year. Tested it. Similar to the McDonald's chart here is what we're dealing with. Slightly higher high, not by much, but just almost like from an intraday standpoint. But we're testing it now. So again, if we're going to get a bounce here, you do have to be cognizant of the fact that you have this declining trend line that's currently sitting at about, 403, 404, but it's also trading at 372. So there's still about 10% upside to this kind of a trade setup. If you can get in, get a bounce to hold here. So far, it's holding on the test of the last 2 days. If it holds, then I would be looking to aggressively book my profits at this declining trend line. So those are the 4 different plays that I would highlight to you. Now, what about gold and silver? Gold and silver has been getting trashed lately. It has been getting absolutely decimated. So what are we looking at here? Probably a huge test is on the horizon here for gold at about this 168 level here. And you can see it's trading at 169, so just below it. Tested that support level today. That's going to be huge. Now, you have this wedge-like pattern that it broke down below. So if you get the bounce from at this 168 level, you want to be looking at possibly taking profits at this 174. Do I want to really be buying gold at these levels? Not really. I mean, I think gold is in general a difficult swing trade, but if you look at it from a long-term perspective too, I mean, there really hasn't been any good long-term opportunities to buy gold from a long-term perspective, at least since, the last 2-3 years. I mean, I think you'd have to go probably back to 2018 where it was trading at 113, where that was a good opportunity there in hindsight. And then you got silver. Silver gives you a lot more volatility, and you have this rising trend line right here that goes back to September of last year, but it couldn't hold it. It held it back in September, but it couldn't hold it here in October. We crushed right through it. That's a big problem. You also had a key level of support right here, could not hold as well. So where does the next layer of support come into play at? Well, you really have to zoom out quite a ways here and hope that you can find some support, because there's not a lot of it. Now there's a little bit of support right there, and it's sitting right on top of it, but you can see it's not clean support by any means. It's been tested back in 2013, 14, and then again, you had a little bit of a breakout here and quickly lost that resistance level. Then it finally broke out in 2020, came back down, did a little similar thing that we saw in 2016 here in 2022, and now we're testing it again. So then you got this declining resistance. If you're going to get a bounce here around this $19 level, it needs to hold this level, probably put my stop loss below the lows from March 10th. That's where you had, the regional banking crisis this year, and then try to ride it back up to this $23 level. So silver has some opportunity there. Could run into some resistance with this broken trend line. Not sure how much of a fight that level is going to put up if it gets up to that level. But if it does, you still have some good profits in hand that you could start booking profits at if you wish. So that's gold and silver. Let's look at some of y'all's charts here. So first up, we got Ryan. What is going on with CCL, you ask? Let's take a look. All right, CCL. This is a weekly chart right here. You can see there's a huge break. This is what concerns me the most. So when it pulled back here, I thought, all right, maybe there's a possibility that we're trying to bounce. I did actually try to bounce back on Thursday, but we lost that support level today. That becomes a huge problem. Now, the next layer of support is going to be this rising trend line off of the October lows. So these are the 2 levels that I'm watching. The first level's already been broken. That now becomes resistance. If it starts to rally here off of the 200-day moving average, you need to be able to see that it can get back above that 1365 level. But if it continues its free fall, breaks through that 200-day moving average, then we're looking at $11 that we're going to be testing on CCL. If you look at some of its competitors like RCL, rising trend line going back to October of last year, this thing had a meteoric rise here in April, May of this year. Looked incredible. Then it started forming this head and shoulders pattern right here. And then it confirmed it. And then it's breaking down too. So it's not just CCL that's breaking down. RCL is also breaking down as well. It was once at 112. Now it's sitting at 86. I think RCL goes for this 77, 78 level. If that happens, probably RCL or CCL is going back down to this $11 mark. What about Norwegian? Let's look at this one, NCLH. Sometimes the symbols, I don't always remember them, but most of them I do. But Norwegian is always the one I forget. Rising trend line here for Norwegian. This goes back to June of last year. Could it go from 15 all the way back down to 13? 100%, I think it could. So that becomes the next layer of support. So what you're seeing here is with NCLH, with RCL, with CCL, there's a significant layer of support underneath with not a lot of support in between. So there's still the potential for a pretty significant drop across the board for some of these cruise liners. It'll be also interesting too when the earnings comes out if they're starting to see a wane in demand at all, because in previous earnings calls they were not saying anything about that kind of stuff. So it'll be very interesting to see if their tone has changed here over the last 3 months or so. So NCLH, watch out for that support level underneath. CCL, support level right here. And then again, RCL right there. All right, let's look at Netflix here. Netflix, this was on my watch list today, and I've been watching it for a while here because you have this huge layer of support that goes all the way back to March, April of last year, and it acted as heavy resistance before it finally broke out. Now it's retesting it. Broke this rising trend line that goes all the way back here to July there, and now it's testing this support level. It's got to hold that support level and bounce. It had all the things going in its favor today from news that it was increasing the monthly rates, the ad-free rates, but it couldn't hold it. It was like up 4% at one point, and now we're talking about a 1% gain. That's an ugly doji candle. I don't like that kind of thing all happening. But in the broader scheme of things, where are we sitting at with NCLH over the past week? It's essentially going sideways. It hasn't really broken down yet. Still holding support. You also have the 200-day moving average right here as well. So if you get another attempt at a bounce, if you start to see the market bounce in the days ahead, and Netflix is definitely one of my candidates for a good bounce play. Hey, Ryan, I'd be curious about your thoughts on Litecoin, thinking of going for a big guy around 50 if it drops a little bit more. Let me pull up my trading view here. All right. There we go. All right. So the question again was thinking of going for a big guy around 50 if it drops a little bit more. Yeah, I mean, that would be a pretty significant drop that I would have to go for. What I would say about Litecoin, I'm seeing the same thing in Bitcoin as well right now, is you got this inverse head and shoulders pattern that's playing out. So you have right here, you have a left shoulder, you have the head, and then you also have the right. That's not the best drawing there. Let's see if I can do a little better there. There we go. We got left shoulder head, right shoulder inverse. Then you got the neckline. It's actually a better looking inverse head and shoulders pattern than what you're getting out of Bitcoin right now. So again, there's some potential there. You may have some resistance with this old broken support level on Litecoin. But your question was, you want to get it if it goes back down to 50. Yeah, I mean, I'm trying to, let me pull up the 1 week chart on this thing. I'm never as good on the trading view, not because I think it's a phenomenal product. I don't use it every day. Let's go to 1 month here. Yeah, I mean, I do think that there's some support at 50. I mean, you can go all the way back into this area here. You got this area here where there's a lot of support. And then you got this area here that there's a lot of support. So yeah, if it gets down to that 50 level, you could see a bounce there. Good point there, Black Mamba. Good point. What do I think about Amazon and Google? Amazon, man, that one took a beating today. All right, I got it. I got to chill on some of these charts here, man. These things are getting messy. And a lot of times that happens on my charts when I'm getting a lot of consolidation, a lot of sideways action, and really going back to June, Amazon is very, very choppy here. So that tends to take place a little bit, but let's go ahead and clean it up a little bit. Rise in trend line going back to March lows. That is broken. So that's gone. That's adios. I'll leave it up there for the purposes of this illustration, but This level was a key support level for me at 127. Got above it, snuck above it a little bit, but then it completely fell apart today. So really, again, the next layer of support becomes this 114 level. There's not a lot of in between, and a lot of that stems from the fact that it made these meteoric rises without any kinds of pullbacks in between. This pullback has a little bit of once had a little bit of support at 127, 128, but now trading at 124. We got to start turning our eyes towards this 114 level. Again, I wouldn't say that we're going to go straight down to 114 here without a bounce. I would expect there to be bounces, but I think ultimately it's going to go back down to this 114 level again. Google, let's see what you got on Google here. Again, a messy chart. Jeez. So there's this red level. This came from this inverse head and shoulders pattern. You see these green circles here. Then you had this white layer of resistance, pushed up against it multiple times, finally fell apart, holding up pretty good against the rest of the market. I mean, there's worse charts out there, trust me. I mean, look at the utilities right now. But I don't necessarily think that there's a really a good edge on it right now. That's the problem. And if it bounces, are we just going to go bouncing from 132 back up to 139? When the market conditions were a little bit more favorable, it couldn't break through that level in bad conditions. I'm a little bit more leery. Tesla long term, man. I wish I could say that I have some Tesla for the long term, but I've never been able to actually get into it. Hindsight, maybe January was a good time to get into it, but I think if I got into it, I would be building it slowly. I don't want to get into it from a long term or in a very quick manner. I want to just go very, very slowly. So Tesla, I mean, you go back to 2020, it's been a fiasco. It's a roller coaster. I mean, it looks like a Disney park roller coaster, really. I mean, just ups and downs all over the place. This rising trend line is going to be the first layer of support here. From a long-term perspective, though, boy, I don't know. Let's pull it up from like, this is what I mean, but when we get these meteoric rises, it's hard to find good key support levels in between. I mean, you look at it from a monthly chart. Where's the next layer of support? It's probably back down at $100. Do I think it's going to go there anytime soon? No, but ultimately it could. I don't know. I think this is one of the reasons that makes Tesla so difficult is that if you're going to buy it for the long term, you almost got to pinch your nose and endure some of the volatility, which I have a hard time doing with something like that. So the answer to the Tesla question is, I don't know. I don't really know. I don't want to say that this rise in trend line from 2023 is the area to be targeting a long-term trend. I just don't think so, especially after you see them missing their deliveries too. Yes, I did go over SPY. You can be able to watch this video afterwards. If you have another stock you want me to look at, feel free to throw it out there. But in any case, good little session with you guys here. Tell your friends, tell your coworkers about it. We got to get more people in these things. I know part of it's on me. I don't do it as consistently as I should have. But again, make sure to like and subscribe to me on the channel here. Make sure that you're getting the notifications. Also, check out swingtradingthestockmarket.com or just click the join button down below if you want more of my videos that I do each and every day. Thank you guys, and God bless.